Hello, hello. It's time for another security token show. It's Monday. We're here all in Miami once again in the studio. And of course, we're your hosts. I'm Herwig, joined by Kyle, as always. How you doing, Kyle?
I'm great, Herwig. Another awesome week of news. We're wrapping up 2023 here. So it's exciting to see that despite the fact that we're already into December, still plenty of things to talk about.
Absolutely. In fact, with that, why don't we jump right into the token debrief?
Let's do it.
And we're here in our token debrief with our regular guest, Jason Barraza, COO of STM. How are you, Jason?
Doing great. Really excited this morning. Covered the news. Let's jump right in.
Well, I'm going to kick it off with a bunch of partnerships. There isn't usually too much to dig into, so I'm going to try to give us a good overview, and you guys let me know if anything sticks out of interest. But we're going to start off with Hacken, who is pioneering new era of tokenized public companies with Bricken. So for those of you who don't know, blockchain auditing firm Hacken. They've joined the quote-unquote path of real-world asset tokenization, as they say, by partnering up with Bricken. Of course, they're an asset tokenization protocol if you haven't heard of them. But what's so interesting about this is that specifically the Hacken, aka the HAI token holders, they will now for the first time ever be offered a possibility to convert their utility token into equity tokens using the Bricken protocol. So very cool as they make the transition into RWAs, as they say. Cool stuff. Next, we also saw an announcement from Archax. They've partnered up with Script. Script is a Swiss financial service provider. They specialize on crypto assets and do a variety of different services. And this time partnering up with Archax to power liquidity. So specifically, Norman Wooding, the founder and CEO of Script, commented, quote, "By leveraging Script's liquidity, Archax amplifies its trading platform with an array of assets, superior liquidity, and guaranteed best execution. We're eager to drive this industry forward alongside Archax through this partnership by not only providing top-notch trading solutions, but also empowering Archax clients to navigate the complex crypto landscape with confidence and efficiency." So I'm really looking forward to seeing what exactly comes out of this, if we see that in the front lines on Archax with Script, or if this is more of a back end thing. We also saw an announcement from Invenium and Cascada. So Invenium is they're a leading private market asset blockchain technology provider, and Cascada is a digital carried interest and management fee software, and they have partnered up, of course, to presumably integrate their Cascada PE suite, which enables carried interest, waterfall distributions, these complex payouts to investors. They can get automated and brought in to the Invenium platform, which of course powers a lot of different tokenized products. So very cool partnership. And last but not least, we also saw an announcement from Obligate. They are a leading on-chain debt capital market, and they have announced a selection that they have chosen Base as a blockchain protocol to go ahead and support token issuances on the Base platform. Yet another RWA player coming to Coinbase's protocol. All super cool announcements. Kyle, Jason, anything that stuck out to you?
For me, I love to see the Base adoption. I think that with the older blockchains, there was always concern around their scalability and some of these different pieces. And then, of course, there were some concerns around their ability to handle the compliance requirements associated with securities. When you have real world assets, you need to know who is being involved in the transaction and how the transaction is being monitored by the licensed intermediaries in the middle. And if anybody in terms of a centralized institution has a good grasp of both the compliance as well as the technology, Coinbase seems to be one of those players that can provide some of that infrastructure. They already have custody integrations with some security tokens from multiple years ago, with BCAP being offered through Coinbase custody. They've explored having an ATS that they acquired in the past. So they certainly understand the compliance needs for this industry. And I think that that's a huge leg up than some of the other blockchains. And then on top of that, they've got all the momentum. So potentially that could drive more liquidity.
It's easy to forget, Kyle, that Coinbase's Base protocol launched less than a year ago. What amazing traction, especially also with RWAs. Jason, any insights on any of these articles?
Yeah. So before we jump into mine, I just want to echo too with Base. I mean, as mentioned, they launched recently and they already have, backed finance, then InvestX. Now we have Obligate. So really good traction for them. Great year for Coinbase and Coinbase team. But I also want to highlight, going back to the Invenium and Cascada Solutions partnership here. It's great to see a theme that's been going around this year, which is back in middle office. And so to see another partnership that's going to be enabling some of those efficiencies and presumably on chain, it's just, it just speaks towards, what that theme has been this year for multiple fronts and multiple players in the industry. So a shout out to them.
That's a great thought.
I think so. So now I think we can get into a next subset of news, and this has to do with the newest platform launch of the week, gentlemen. So on the heels of Copper's recent acquisition of Securrency, which they launched a new platform. This is supposedly for digital securities brokerage, specifically focused in that MENA region based in Abu Dhabi. So Copper came out with an announcement. They want to launch this in early 2024. They're cooperating with the Abu Dhabi Financial Services Regulatory Authority, the FSRA, which is where they're going to be licensed and permitted to do business. As I said, this really comes on the acquisition of Securrency, which had a lot of relationships and licensure in that region, which we saw earlier this year. And their goals is to provide corporate action settlements on chain, as well as expanding into securities financing, lending, and payments. So this is a pretty robust platform, but we're continuing to see this adoption of very institutional corporate financial vehicles, as opposed to more of like the crowdfunding style of themes that we saw early in the life cycle of the security token industry. So didn't know if you guys had any thoughts around that, but we certainly have plenty of institutional news here and coming up on the show.
Yeah, no, I definitely want to add, specifically, this is Securrency Capital, which for those of you who don't know, I'm sure you heard that DTCC acquired Securrency. That was more of their technology stack and their team. Securrency Capital had a very active presence in the UAE. That's why I assume that this was a strategic acquisition there for Copper. And I think this is great news. This is yet another sign that there is a Web3 migration, native crypto companies recognizing the RWA trend, as we saw with the launch of Base supporting RWA protocols for Coinbase, as I announced earlier, with Hacken going ahead and converting from utility to equity. I think we're going to continue to see native crypto companies embrace this technology, and all for it, because this is how it should be, in my opinion.
Great traction coming out of that area of the world. We've seen, what was it, ASX, the Abu Dhabi Exchange, recently announced that they were going to start working with digital securities. Now we have this news. The Pearl a few months back as well being tokenized,
Right.
a big $10 billion piece of real estate. So that whole region, great to see them more involved this year in the security token space. What's going on institutionally, guys?
Well, I'm happy to tell you about the International Monetary Fund, the World Bank and the Bank for International Settlements. That's a BIS. They have reportedly joined forces to explore, the concept of tokenization. Specifically, their collaboration aims to leverage the technology to streamline financial processes and enhance global economic development. That's a very broad scope, I think. But of course, we're talking about the IMF, one of the most recognized international, economic groups, as well as the World Bank and the Bank of International Settlements. I don't know if you can get three bigger powerhouses together that can have such global impact, but it's worth noting that specifically they aim to tokenize promissory notes. When specifically richer countries donate to the World Bank's funds, they might be able to digitize those, take advantage of the efficiencies, which is, of course, when countries donate to the World Bank, we're talking about mega huge amounts. So any thoughts on this, guys?
It's cool to see that tokenization is just so mainstream now that the largest economic institutions globally are every day, every week, we're covering new banks and platforms that are doing deeper dives and researching this. And certainly the IMF, World Bank, and the BIS set standards that every country and every financial institution follows and they look for those guidelines. So cool to see that they're really diving into this, because I think that they're going to find a lot of things that they like.
Definitely. And moving on to another piece of institutional news, we have SKCNC to be providing blockchain-based security token services for HANA Securities. So this will be on the blockchain service platform called ChainZ Security Token, or ChainZST for a little shorter, to really build out, opportunities for HANA Securities to have subscriptions, allocations, all on chain, as well as being able to surveillance functions, monitor the smooth issuance of some of these processes. So really exciting for HANA Securities. I know they've been covered a couple times in the past, specifically in the State of Security Tokens report. So keep an eye out for those as well. Any thoughts there, guys?
Great, exciting developments, I think, on that front. Herwig, if you don't have anything else, I think we can dive into the final article here of our institutional segment, which is MasterCard. They trialed an EHKD, so an e-Hong Kong dollar, for luxury purchases in Web3. And this is kind of a pilot and an interesting survey. So when we start with the pilot, basically they launched a CBDC with the Hong Kong government that allowed people to buy Web3, actually NFTs, and not necessarily cartoon pictures, but NFTs for authenticity. So representing your unique access. So I think that this is probably the best use case of an NFT, right? Is to represent your serial number and your access. And so the pilot had a conditional payment structure where it released the NFTs only once the funds were put into the smart contract. So it was kind of like an escrow system that was fully automated. Fascinating stuff. And I think, again, a great use case for smart contracts and digital payments. And so they used multi-token networks. They built it on a CBD sandbox. And then they launched this survey where 2/3 of Hong Kong digital asset owners responded saying they'd rather use the EHKD, the e-dollar, than using stablecoins. So this was a really strong vote of confidence for launching CBDCs that are sanctioned by the government, as opposed to some of these private stablecoins. So at least from this survey, the public seems to be much more enthused around CBDCs than what has been reported by other institutions, or certainly other governments that have been trying to push against this. So I think that that's really the biggest thing here, is not only was it working well, but there seems to be highly positive sentiment coming from the APAC region.
That it seems. That's exciting. As we're seeing more and more CBDC trialing. We've talked plenty in the past about how, whether they're stable coins or CBDCs, we need that settlement layer into a currency, usually the US dollar, in order to have atomic swaps and true settlement on chain for securities and payments in general. You need both sides to be Web3. So I think these CBDCs, whether they are truly designed for consumers or more for banks and institutions, they're going to play a critical role in powering the infrastructure. So it's great to see a big name like MasterCard doing this. I don't think anyone else would have expected that necessarily. It's for them to be jumping so hard into CBDCs. I think that's really interesting. And we're going to end up this segment with a couple of opinion articles. Would love to hear your thoughts on if you think these folks are right, or if there's something wrong that you think they said. But ultimately, first, we did see an announcement from the Hong Kong Monetary Authority, specifically finding that tokenization reduces borrowing costs by 0.78%, 78 basis points, and underwriting fees by 0.22%, that's 22 basis points, of the bond's par value. And we're talking about bonds, of course, so basis points make a significant impact, but it improved liquidity, which I thought was the most interesting of all. They quoted it by saying it improved by 5.3%, rising to 10.8% total if access is available to retail investors. So this is proving the point that fractionalization and lowering that barrier to entry does enable more potential buyers. The thesis there being more buyers, more potential demand, which will of course lead to more liquidity. It's very commonly, discussed that you want to have retail investors so that you have as many possible buyers, as opposed to a very constricted institutional network. So I thought that was very interesting. Maybe a lot of people aren't too excited about those numbers, but I certainly am. And the last article that I want to mention for our segment here is Colin Butler, the nice little interview with Christine Moy and Tyrone Lobon. Hopefully I said that right, from JP Morgan, and Christine from Moy, who was actually at JP Morgan before that. And the article is headlined 2024 will be the year tokenization truly finally begins. And it is an interview style article. It is worth reading for anyone who hasn't seen it. I highly recommend you go check it out, diving deep into what JPM and Apollo have been doing and their vision. Although I might just end on personally saying tokenization, began a long time ago.
Yeah, 100%.
But I think what they're implying, what Colin might be implying, is that it's truly going to go mainstream, which may also be debatable. What do you guys think?
Jason, do you have any gut instincts on either one of those?
Yeah. So a couple things. One, it's tokenization is definitely being talked about a lot more seriously now than it was 5 years ago when we started, and whatnot. So that's good to see. And there's a lot more tangible examples in terms of issuances, in terms of institutions coming on, cost savings back in middle office. So that's great to see. That being said, there's still a lot to go in terms of getting everything, all the infrastructure on chain to be able to really operate front to back for the full life cycle. That might take closer to 5 to 10 years, considering all the red tape that's there and the archaic system that's there worldwide. So although that I think next year will be great, and I'm sure that we're going to be expecting a lot more issuances and a lot more news coming out, we'll have to see exactly what he means by the year of tokenization. I could have a range of implications. Any other thoughts there?
Yeah, if you've been watching the show for the last couple months or maybe years, since we've been doing this for 4.5 years now, you'll know that I'm a stickler for quantifying benefits. So I got really excited seeing the research on tokenized bonds. To reiterate Herwig's point, tokenized bonds reduce the cost of capital by a full 1%. Between 0.78 and 0.22, that is 1%. A dollar saved is much more than a dollar earned due to taxes. But even if we assume that 1% cost of capital increases your yield on a debt instrument by 1%, when it probably would increase by technically more, 1% on, let's say, the average corporate debt note is 8%, 9%, you're talking 10 to 12% increase in yield, like on the average yield. So that's double-digit percent savings when you look at it from the relative numbers, just by leveraging tokenization. This is like really important stuff. And so then you layer on the improved liquidity, which, as we know, debt instruments often have a liquidity discount because of the fact that they are not liquid. So if you can increase the liquidity, you also are going to reduce the discount applied, which also should, in theory, increase the yield, or certainly at least the cost for the end buyer, which reduces your cost of capital, which then potentially would increase the return profile even more. So we're talking, upwards of 15, maybe if you're even lucky, 20% increases in yield for debt just by leveraging tokenization. This is pretty big news, even though 1% doesn't sound like a big deal. 1% on 8% is a significant change. And so really, really cool to see this, because I think that for most of the tokenized securities life cycle, it's been very metaphysical. It's been very philosophical in terms of, what these benefits might look like. This is another great example of an article that really showcases the benefits of this stuff. I think also proves why a lot of this is institutional, because at scale is where you really see a lot of the benefits.
I think you made excellent points there. There are two I want to extrapolate there. The first is ultimately the bond market, right? To your point, this is trillions of dollars in size. Most people don't really necessarily pay attention to that. I think for institutions, this is a big deal. And to your point, it's good to be a stickler for this stuff, because even the proof of concepts by the big institutions, all these trials, these use cases, they're still very much so, very closed environments. No one's actually publishing these exact results. I thought it was great to see from the JPM Apollo announcement, taking 3,000 processes and taking it down to a click or a few clicks. Like, that's the type of stuff we need to see, but it's even better when we can quantify it down to a mathematical level. So huge shout out to the Hong Kong Monetary Authority. And also, I think it's worth pointing out that the RWA community and the rise of treasury bonds and products that we've seen, I think that has a lot to do with, just on-chain yield and having something tied to a real world asset. I don't think anyone buying those products is thinking about the fact that this is now a more efficient treasury product, or in the road down the road, hopefully when they are natively digitally issued, you're going to see way more, capabilities and way more efficient bond markets, especially institutionally, despite also this rise in retail access to those markets. So I think that's an awesome takeaway, Kyle.
Totally agree. And I think that if that's it, we can dive right into our next segment, market movements.
Let's do it.
All right, so getting into our market movement segment, of course, we have our great co-hosts here, Jason and Herwig. We're kicking this one off with Republic. And so if you've been following this saga, Republic is the leading crowdfunding platform in certainly the US, but presumably the world, as the US is probably the largest crowdfunding market. And they do those smaller retail style of offerings. You can raise up to 5 million. They announced they were doing a security token, and they raised, I believe it was somewhere in the range of 15 to 20 million for their portfolio of equities of companies that have used their crowdfunding platform. And they actually launched a security token behind it called the Republic Note. And then we didn't hear a whole lot for 18 months or something like that. Everybody got really excited. They sold it out. And then we just kind of wanted to wait and see. Well, as it turns out, they were working hard behind the scenes. And after their investment and potentially future acquisition of INX, they have announced they will be listing their token, which has been issued on the Avalanche blockchain, onto the INX platform. And so this token represents Republic's venture portfolio, which does include SpaceX shares as well as Dapper Labs shares, aside from a ton of other assets in their portfolio. But a retail token that you can buy into SpaceX is pretty exciting. And this is aimed at retail investors, meaning that it's not just accredited only, and it pays dividends in USDC, presumably into your wallet. So pretty cool. The note here says they raised over 30 million in their private sale. So maybe they did a second sale, or they oversubscribed from the headline I remember. And so they're crushing it, guys. They're going to be listed here. This is maybe the highest profile token listing of the last 12 months, at least. So I'm pretty excited about it.
You could say that again. This absolutely might be the most high profile listing of the year, simply due to the interest by potential retail. This is two retail powerhouses coming together. We're talking about INX. We're talking about Republic. They are easily considered the most retail focused, if you will, I think. And as a result, you're for the first time ever enabling access to venture capital. As a retail investor, other than being able to pick some companies on Republic, it's so hard to get access to a portfolio. And in this case, Republic has, done all the due diligence. They've set up the structure. They've set up everything up in a cool way so that you can, trust them to invest in a diverse portfolio of venture capital, of startups, which is critical for anyone who doesn't invest in that space. You want to be able to have, a shot at many shots at success when it comes to startup investing versus putting your eggs into one basket. So it's a very unique structure. We did dive more into it last week with Republic and Avalanche when they announced their selection of Avalanche. So definitely go check out on YouTube. We have a whole dedicated interview with Jeff Fear from Republic, their senior head of tokenization, and Morgan Kropetsky from Avalanche, the head of institutional there. So definitely recommend checking that out. I think this is huge news, Kyle. I'm so excited. I might actually have to buy this one. I usually try to refrain from buying them, so I don't have to always disclose on the show what I own. So I don't really own too many, but wow, this one is intriguing.
Definitely exciting to see this news. And it's not the only news coming from Republic and INX, right? We did see last week's episode having Renata from INX on the show talking about the acquisition deal, being extended till, I want to say, February. Now we have this listing, believe going live December 6th. And let's not forget that Republic Wallet will also be integrating into the INX platform by the end of the year. So also something else to keep an eye out for. But, again, as you guys alluded to, this is a very, retail-oriented narrative. And speaking of retail, I do want to dive into Delmore, who just achieved over $260 million in crowdfunded capital for their clients over the past 5 years. I mean, that's no small feat, guys. Pretty decent amount. You're rallying a lot of the masses. And Delmore has proven time and time again that they are really good at this crowdfunding game. So, just give some figures over the last few months. We had 43.3 million in July. It increased to 50.3 million in August, increased again to 52.5 in September. And then October, they had a really good month, 70.2 million. And then tapering off here in November as we close out the year, holiday season and whatnot. So congrats to Delmore. Really exciting to see that. And of course, for all their clients and the success that's going on there in the crowdfunding world.
It's great to hear. Great to see. Dalmore is clearly leading and helping fix that distribution problem and helping people raise capital. That's $500 million in 1 year at this pace. Maybe even we'll climb up to $1 billion next year or the year after that. So that's a massive amount of capital that's being facilitated. Huge shout out to Dalmore. I want to move it on next to a big announcement from an art tokenization project. So a leading new project collaboration called Artori Wins is launching an art fund tokenized in Singapore with SDAX, the Singapore Digital Asset Exchange. And they have a joint venture where the Winston Art Group is basically going to curate what they say is approximately 200 pieces of art, physical artworks from 60 to 80 different artists, again, lending that diversification benefits of being in a fund. And specifically, they have, working with Artori. Artori is one of the leading art tokenization platforms out there. So this one makes a lot of sense. Going on in Singapore, you can now get yourself access to a tokenized art fund, blue chip artists, they say, although they didn't say who yet. So we'll be sure to keep an eye.
Very exciting. We know Arturi has been active in this space. Cool to see that they continue to drive developments, working with the traditional players in their industry, as well as some of the other technology providers in the space.
Well, with that, Kyle, why don't we end our show with our companies of the week? That's the market movements.
All right, Herwig, we got to close out our show here, huh?
What a show. What a show. Love it every single week. It only gets better and better with the industry going crazy like this.
Totally.
I remember back in the day, we would have some stale weeks, but here we are, no problems deciding. Well, it might still be difficult, but at least you have plenty of options to choose from. In which case, Kyle, who did you pick for your company of the week, which may just make them company of the year starting in 2024? Who you got?
I think I've got a pretty compelling case for company of the year, to be honest with you. I think I've given them company of the week in previous weeks from years past because they've been a consistent innovator in this industry. For me, it's Republic. We talked about it from my news segment earlier in our market movement segment, but Republic has raised over 30 million for their venture portfolio. They're launching a tokenized security on Avalanche, which we know them very well. They've been very diligent in building technology stacks to support securities issuances. And it's going to be listing on INX, a company that they announced they're going to acquire to build their own ATS. And so presumably this is going to be an on-ramp for many of the other companies that fundraise through their platform to potentially take advantage of this liquidity. So from all regards, Republic is crushing it, and exciting to see that they're going to have a trading token to drive more interest into the secondary markets.
Oh, it's huge, man. It's so huge. Absolutely right. Good choice. If we haven't chosen them this year already, we have to put them in the running. So thoughtful about them, considering, INX as a venue they might outright acquire because they value having an end-to-end ecosystem. They've built out their wallet technology to enable, custody of tokenized securities. They've selected, Avalanche as a fantastic partner. They have a whole tokenization team. It's going to be really, really exciting year for Republic in 2024, and they're kicking it off with a bang starting next week with that listing on INX for their Republic note. So, and again, the Republic note in itself, such a cool structure, as I mentioned earlier on the show. Gotta love it.
How about you?
I got to give it over to Copper, man. Copper being such a massive, hugely recognized, popular crypto native company, to see them embrace security tokens, to see them embrace the Middle East specifically, where we know there's going to be a huge surge in growth given the infrastructure, regulatory support, the amount of capital that's out there, the amount of great assets. I'm just super excited to see how Copper almost redefines themselves, hopefully, as a security token company. So with that, Copper, you're my company of the week.
That's awesome. Makes total sense. They've been consistent, building, developing, innovating. I think we had two really good choices this week, Herwig.
It continues to get harder every week, as we just mentioned, but two really great choices. Absolutely. Congratulations to those two companies and to everybody else moving this space forward. It's been another great week. We hope to catch you again on Mondays. Every single week, we're here to bring you the latest and greatest in the tokenization space, RWA, security tokens. And meanwhile, STM.co is your one-stop shop for all trading information and everything else happening into market. Kyle, I'll catch you next week, and everybody else, happy tokenizing.